Hello, folks. It's another wonderful Sunday. We are here to look at the markets. This is the video version of the Market Pulse newsletter. We produce this every week for free. And this week we have Disney on the cover. Disney made a big move on Friday. Let's jump to the chart. I'm showing you this is the print edition, and just FYI, if you sign up on the website, you can sign up. You'll get the print edition in email, along with a link to the video edition, which is what you're watching currently. So let's go straight to the charts. As I was saying, Disney made a big move up on Friday. This was in response to an online investor event that they held, highlighting their streaming direct-to-consumer services. And so I'm guessing that investors are ignoring the fact that Disney's got a couple of, well, not more than a couple, theme parks sitting unused at this point. So anyway, big gap higher. Would expect price to bump along, do some consolidation up here as it digests this big move. It occurred on big volume. This is I think it's like eight or nine times the average volume in Disney, and it all occurred on Friday. So. And then in contrast, so we got this big bullish move in an entertainment stock. And so I was thinking to myself, okay, well, let's look at something else that's kind of an entertainment stock. Of course, this is Carnival Cruise Lines. And so in contrast to the tech companies with their online businesses, a company like Carnival, they're kind of stuck until we get some resolution to the COVID situation. And so what we see in the price chart is that price has rallied back up into this. It's 38.2% fib retracement of this big price plunge that we had back in the start of 2020. And so and we see here what happened last time price reached to this level. It then sold off again. So here we are, price is at that level yet again. And coincidentally, we've got MACD up here at a overbought level, the same overbought level that stopped the price rally back here in June. And so in contrast to Disney, Carnival is not looking good here. Price could pull back and find support on the 20-day moving average, and perhaps make another attempt to push through that fib level. But we'll see. So now we're into the main equity indexes. This is the S&P 500. And so I was thinking back here last week that price was demonstrating that it was going to push up through resistance along the median line of this blue Andrews pitchfork. But of course that didn't happen. So price was actually held back at that level and then dropped off towards the end of the week. And so now we have, as we finished Friday, we have price sitting above this horizontal support resistance level and the 20-day moving average. We did get a new sell signal in MACD, and of course MACD is very, very overbought at this point. We've got 3 trading weeks left in the year, so I'm not writing off the chance of a year-end rally at this point, and our target would be in the S&P 500 somewhere up here, pushing towards 4,000. A more conservative target if we, yeah, see, that doesn't really do it for us. Nah, never mind. Pretend I didn't say that. So we'll evaluate any rally when it occurs. In the Dow, pretty much the same story. We got price sitting on support at the 20-day moving average. These lower tails on these candlesticks suggest bottoming action, and of course that's the lower median line of the blue Andrews pitchfork there, where price appears to be finding support. Our next target, if we do get a year-end rally, is up at the median line of the pitchfork, blue Andrews pitchfork. MACD sell signal last week. Nasdaq, the Nasdaq was stronger than the Dow, but then last week did a more significant pullback. This was a bigger pullback in the Nasdaq last week than we got in either the Dow or S&P 500. So on the other hand, Friday's candle with that relatively long lower tail is somewhat bullish, and so we could be seeing some bottoming action with a year-end target still in play. The Nasdaq is not as overbought as the S&P 500 and the Dow based on MACD. So I won't go into detail on that, but the Nasdaq is not as overbought as S&P 500 and Dow. It is, on the other hand, extremely overbought, as all the equity markets are. Here's the 200-day moving average. There's the 50 way up there, and of course price is up above both of them. And so anyway, equity markets are very overbought. The dollar is quite oversold, in contrast. We got a relief rally. In my opinion, this was a relief rally back up to the 50-day moving average last week, and then price appears to be rolling over again. We got some kind of horizontal support level here. We'll have to see if that can hold. Those candlesticks look kind of heavy to me and downtrending, on a minor downtrend there. Not bullish. Nothing bullish in this chart. I want to point out that relief rallies tend to be very quick, and they happen quickly and they end quickly. And I submit that that's exactly what we have here, is a quick relief rally, bumped into the 50-day moving average and then turned back over. Same behavior back up here is, quick rally, 50-day, roll back over. Why the reason we care about judging whether this is a relief rally or not is that relief rallies tend to occur counter to the direction of trend. And so in this case, the dollar is in a downtrend, and we get a quick relief rally back up before the downtrend continues. And so being able to judge whether it's a relief rally or not can be useful. In the gold chart, looks like we're starting with the weekly. So this is Brian having fun. So the last time gold visited this is the 40-day moving average. It's equivalent to the 200-day moving average in the daily time frame. Last time price was down at this level, we subsequently got a $625 rally. And so I'm just spitballing. This is my bias, gold bull and silver bull demonstrating itself. If we were to repeat a $625 rally, that brings 2,400 into play as a price target. because gold has just retested its 200-day moving average, 40-week moving average, and now price is back above that level, bumping sideways. Let's look at the daily chart. So we had the price rallying last week, but it reached the 50-day moving average and then rolled back over and lost the 1850 support resistance level. And so now we got price, it's bumping along the 20-day moving average, back below 1850. Not much else to say there other than to point out that if the US dollar rolls over, as I somewhat expect it to, that could drive gold decisively through this 1850 level and through the 50-day moving average. And then our next price target, we're back 1964 or so, somewhere back in there as our next price target. But we'll leave that for another day. This is silver. Silver mostly bumping sideways, but I don't have any problem at all with the behavior in silver. Let's back out a little bit. Ignore all this. Let me get rid of all this chicken scratching on here. Keep in mind what silver has done in 2020. Here we are down at 11, that's 1165, and that's, call it 30. I mean, didn't quite hit 30, it's 29.85, but, what is that? We're call it 12 and 30. Isn't that $18 worth of rally in silver in 1 year? I mean, that's more than a double. And so let's not sneeze at the behavior that silver is giving us. Is that let me draw it horizontal. Is that a bullish flag or pendant in an ongoing uptrend? Just as a possibility, pendants or flags tend to mark the midpoint of price movements. And so just spitballing for fun here, if we wanted to do that and then clone that line, and again was just for funsies, we're doing this quick. Let's assume that price were to break out there, and so a repeat of that rally coming out of this, assuming that's a bullish flag or pendant, that gives us target up here at $42. And so, if you if you're a silver bull and you like thinking about big targets, there's a potential target at 42. The mining stocks, as indicated by GDXJ, that's my preferred proxy for the mining stocks. I want to point out, in my opinion, this is bottoming action. We got an exhaustion gap down into the 200-day moving average, followed by some sideways bumping in a generally uptrending manner, and then a bullish gap higher. And now I'm looking at this price action as basing. And notice that the basing is occurring above this open gap, which I'm considering as bullish action. We've got potential support along the median line of this modified shift pitchfork, and this is the second lower extension of this blue Andrews pitchfork. And so the stocks are looking good. Technically still in a downtrend, but I consider this bullish action. Let's see, Brent Crude made a bullish push through the $50 level last week, big candle there, and it now appears to be doing a pullback to the breakout level, testing it for support. This Andrews pitchfork has been describing this uptrend in Brent quite well. You know, notice the price action along this upper median line, and then the upper median line extension. And so now we've got price has decisively pushed above that median line extension, and this pullback to the breakout level, it could also be testing support above the median line extension here. So the next price target in Brent, we pull back a little bit here. It's this support resistance level. I'll throw it on there just for funsies. Right in there. So we get a support resistance line. It's 53.50, and as I like to point out, when I'm looking for horizontal support resistance, I look for areas where price tests a level as support, that level fails, and then price tests the level from below as resistance. And so what I see there is a demonstration that for whatever reason, that level is a support resistance level. In this case, it's about 53.50. And so if we're looking for a price target, that's a potential 53.50 right there. And this is the 10-year yield. Again, this is a modified shift pitchfork, and it's describing this uptrend in interest rates quite nicely. We can see that the lower median line has provided support several times, and it appears that on Friday that happened again, that we got support along the lower median line, and the yield was able to bounce higher. Relatively bullish action, that long lower tail on that doji candlestick. So yeah, suggestive of bottoming along this support level with the next leg higher. And as a swing trader, you know, short at the top, long at the bottom, short at the top, long at the bottom. I mean, you know, it's like how long you keep working the trend until it demonstrates that it wants to do something different. And right now, it appears that the trend has found a bottom and wants to head higher again. So 18 minutes, I am done. Have a fantastic week, folks.